Welcome back to another midweek episode of the Andrew Hines Real Estate Investing Podcast. I'm your host, Andrew Hines, as always. And today we're going to jump into the topic of consumer price index, what's been going on in Canada and the US, and what the outlook is because of that. So firstly, I'm just going to point out that consumer price index, so now for the second month in a row, is sub 3%. So the June report is now out at 2.7% growth year over year from last year, which, if you know anything about economic policy in Canada long term, the goal has always been have inflation between 1% and 3%. Why? Because between 1% and 3% seems to be that sweet spot, which allows the GDP to grow, but doesn't allow prices to grow, too crazy. And the way they control this is obviously interest rates. So interest rates are the lever they pull on, which, I mean, I've talked at length. I think that's so stupid that's the only lever they pull on, and it's very destructive, and it's basically like a mechanic just starting to swing a hammer inside of an engine. But that's a different topic for a different day. But what I will say is, with all that in mind, that's sort of the traditional economic policy, modern economic policy that is used today. And knowing that, a lot of people are wondering, are we going to see a rate cut soon? And I think that the likelihood of that is pretty high at this point in both Canada and the US. And before I go into that further, I wanted to also just take a step back and say, well, why? Why is CPI down? There's a couple of reasons. They talk about oil. They talk about some other costs that have come down, a slowdown in the economy. But one of the big things that is not often referenced, except for on sort of alternative channels, is that the interest rates themselves actually are affecting consumer price index because interest factors into housing costs, and with less interest because of the quarter point bump or drop last quarter, that actually allowed for housing prices to come down a bit. So that was a factor in there too. I saw a tweet shared that yes, inflation is affected by interest rates. So we're trying to combat inflation with hiking interest rates, but the interest rates themselves actually jack inflation. Yes, it really is that dumb. And I get it. Some people are going to argue, well, it's useful. Like, what would you do? This is just my opinion. I think it's dumb. I think that there are a number of ways that inflation could have been fixed, including stimulating supply, other things that are more of a nuanced approach rather than a hammer, and interest rates being the hammer. Okay, so why do I think that we're likely to see another decrease? Well, there are signs that the economy is slowing for sure in Canada. If you look at GDP per capita, it's been steadily falling, and we're piling immigrants into the country. So that's devastating. So yes, you can prop GDP up and make GDP look positive, but if that only happened by adding 1 million bodies to the country, that's gross. That's really bad. A lot of Canadians are hurting. That's no surprise. The interest rates would be welcome. And what would that do to sentiment for investors and such? Well, I think it'd be pretty good because the first rate drop, you're kind of questioning it, thinking, hey, is this for real? Are things really on the road to getting better? And when it happens a few more times, well, now we're thinking, oh, hey, this is real. So I do think that it requires the U.S. to do something. So Canada's likelihood to drop interest rates further will really, really depend on whether the United States makes some sort of movement in that direction, which, given that their CPI is now below 3% for June, and this is growth, the CPI year over year growth is below 3% for June, that makes it all that much more likely that the U.S. is going to make a cut. And there are a lot of people who are now pricing in 1 or 2 rate cuts in the U.S. too. So knowing that that's what's being predicted in the U.S., I think it's very likely that we see a couple more cuts in Canada this year. So I wasn't completely sure that what was going to happen, but now that I'm seeing that CPI is actually somehow under 3, it seems a lot more likely here. So obviously things change, perspectives change, and I've long said I'm not sure, things could go either way. I still think that, but this brings me into the next thing I wanted to touch on, which is housing costs and the direction of housing pricing going forward. I know there are people out there who think housing prices are gonna go to the moon. We're getting near the bottom. And then there are other people like myself that think there's a potential that housing prices can continue to stagnate for years to come, despite the immigration challenge in both Canada and the US, where we've got all these new people in the country that need a place to live. In the US, it's a lot more illegal people in the country with needing a place to live, but that still has an impact. In Canada, it's legally people are here that need a place to live. Driving housing costs up, but I mean, the secret's kind of out that it's not all it's cracked up to be here in Canada, especially given the rising cost of living. So who knows if the demand for housing stays as high as it is right now. So that leaves the possibility open that housing, and I'm not talking all real estate, I'm talking housing, basic single family housing, condos, duplexes, but mostly just like single family stuff. That stuff is the type of stuff that's likely to be occupied and bought up by those people coming into the country. And if they leave and the housing prices and the cost of construction stays high, they might not end up buying that stuff. With regards to multifamily and stuff, like I think there's a lot of programs on right now that are going to continue to drive those prices up or keep them similar or the same. But again, who knows for sure? This isn't advice. This is just my thoughts. So I am happy to see it. I am happy to see CPI come down because I want to see people winning. And I've seen a lot of sentiment, and I hear the stories. People send me stories and private messages saying, "Oh, this person didn't pay," and all that. And I think that's terrible. And that's another whole conversation, but I want to hear more of the, hey, I just bought a duplex and we cranked it out and we made all this money. Like, I love hearing that kind of thing. I don't like hearing people complain about things that went wrong. I mean, yes, it happens to all of us, but I'm big on, as I've said, responsibility. Take responsibility for your part in getting involved in that and what you're going to do. And also, in the future, learn from that. Learn how to work with people who are going to do good, work with people who have something to lose with a good track record, all that stuff. And, make lemonade out of lemons when it happens, because it's happened to all of us. I've had many things which I've shared on this podcast. But let's get back to winning. And I can't wait to hear more people sending me those wins. My own personal note is like, I wanted that. That's why I started investing in the US. That's why we've done the stuff that we've done with the glamping and the hospitality in Tobermory. We were seeing what was happening in the market, and seeing that it was likely coming to a near end in terms of like, it just doesn't work. The prices weren't working. I was never hot on this crazy Canadian prices as they were going up and up and up. I didn't like that. That was a big part of why I bought that camp. And a big part of what I'm doing in the US now is like buying stuff and winning in spite of a market that might be challenging, which I know I've shared before. So circling right back around, sentiment should be changing more and more as we go forward. Of course, there are still some messes that people are cleaning up, and I hear about it because these people are in my network, but I know, and I have my eye on a lot of people who are winning too. And big takeaway for today is focus on the wins, focus on the good, and focus on the fact that no matter what our market is, we get to decide on our success. So those are my big takeaways for today's podcast. So a couple of things I wanted to point out is we are doing our equity raise for our glamping facility up in Tobermory that I did just mention. We've got 2 hospitality resorts up there actually in total, but on our glamping, our campsite, we're doing our raise. If you're interested in more information on that, you can send me a DM on either Instagram at the Andrew Hines or directly to my email, andrew@andrew-hines.com. This is an exempt market offering. It's only available to accredited investors. And I'm sure I haven't talked about returns, so I don't have to do that disclaimer, but it's good. But just so you know, projected returns are not guaranteed because I can't guarantee market conditions. But if you're interested in that, we have a whole REI Hot Seat episode that Zach and I, my business partner, we jumped on and we just dove into it. Why do we like it? What's good about it? What are some of the risks and how do we feel they're mitigated? It's obviously something we've poured our blood, sweat, and tears into over the last few years, and we're proud to see it growing. So that does come out in the video. Not a narcissist or anything like that. Just we're proud of what we've done and we wanted to share that. So, And we're now on Spotify with REI Hot Seat. So REI Hot Seat is a deal analysis show. So if you want to hone in and tune up your deal analysis skills, REI Hot Seat's where it's at. So we constantly are evaluating multifamily and mixed use buildings. We're getting into spreadsheets. We're sharing those spreadsheets on the screen. So it was previously only on YouTube, but now we're on Spotify as a video podcast as well. So you can turn the screen on, check out that spreadsheet, then turn it off and, drive to where you're going. So best of both worlds there. And then because it's on Spotify, it actually also distributes to the other major platforms. So video is recommended, but if you can't, there are several episodes we do that are just talk. And a lot of it is me talking with various different people, including Jake Campanero, Zach Wilms, Dave Holshoff. Those are our regulars. All commercial, mixed use, multifamily experts that they understand the investing world through and through, and we just constantly have discussions, which is a lot of fun. So I thought I'd share that here. And yeah, guys, thank you for tuning in to yet another week's episode. I got some positive feedback about last week's episode, just digging into do's and don'ts of buying hospitality. So I'm going to do more episodes like that. Keep the feedback coming, guys. Send me suggestions. What do you want to hear about? What do you want to know about? And I'd love to talk more with you. So thanks again. I will see you next week.